Hello, my name's Todd Lees from Lotema Brokerage and welcome to our weekly update for cereals and pulses in Australia. Well, we're probably a good 2 weeks into the planting program now, which means that probably there's about 10% of the crop in the ground in most cropping regions of Australia. And most would say that the crop has been planted into average to good soil moisture conditions. As far as planting intentions go, the general consensus is that crops such as canola, lentils and chickpeas planted area will be higher than last year, and this would be at the expense of crops such as barley and fava beans, which didn't, from a price perspective, really didn't perform as well as farmers would have liked this year. And while the planted area is expected to be higher for the likes of canola, chickpeas and lentils, we still have a long way to go to achieve the yields and the final overall production that we were fortunate enough to achieve in 16-17. The final crop estimates for wheat were about 35 million tonne, while the latest estimates for chickpeas are around 2 million tonnes. Now, with the Bureau's forecast of an El Nino season for the balance of the year, we're certainly going to need very timely rainfall throughout the growing period to even get anywhere near close to those yields and final production that we achieved in 16-17. Another caveat is that the growing area in northern New South Wales is yet to receive planting rain. So that could have a very significant effect on the final production achieved for the year if they don't get decent planting rain, particularly for chickpeas. Major issues for exporters still revolve around the fact that it's very difficult to get food grade containers. Shipping lines are cancelling container bookings with little notice or even without notice, and also the fact that new crop freight rates are yet to be disclosed by the shipping lines. So really it creates a lot of uncertainty for all exporters, and therefore a general reluctance to commit to any new crop bookings, October-November bookings at this stage. So if you found it difficult to get new crop offers, that could be one of the main reasons for that. The fact that exporters don't know what the freight rates are. To the markets, generally pretty quiet on both the buyer and seller sides the last 2 weeks. Farmers are busy planting and they're concentrating on their planting programs, so it may be a good few weeks yet before they're ready once again to focus on the marketing of any remaining stocks that they may have on farm in storage. One commodity we are starting to see a bit of a resurgence of interest in is fava beans to the Red Sea destinations, particularly Egypt, which is very good to see given fava bean prices have been in the doldrums, and interest has been in the doldrums for the past 2 to 3 months. Indicative prices, Desi old crop is about $9.90, while new crop is about $7.80, $7.90. Red lentils are about $6.50 to the subcontinent. Fava beans about $3.10 to $3.20 to the Red Sea, and Albus lupins about $3.55 to the Red Sea destinations. Well, that's it for this week. Fortunately, next week it's going to be a 5-day week. In Australia, we've had public holidays the last 2 to 3 weeks, so they've been short weeks, but next week's back to normal. So thanks for listening, and we look forward to catching up with you again next week. Bye for now.